Hey traders, Jason here with a Day Trading Fearless. In this video, we're going to talk about the difference between support and resistance levels versus supply and demand levels. Two totally different things, and we're going to kind of jump into it, and hopefully you guys will like this video. Also, do me a favor, comment down below if you guys use either support and resistance or supply and demand zones. So, essentially, what is a support level in the market, right? So support levels can be where price actually finds support, right? Where we could see something along these lines right here, right? So what happens is price kind of rallies up, comes down, right? Boom, we bounce, and then we go higher, right? We saw the same thing here. Price goes up, down, bounce, and that creates a support level, okay? That's a level where buyers are interested just looking at the bigger picture of the market. Now, as far as a what you call it, a resistance level, we could see resistance right here, right? So we see price kind of rally up, find sellers, pull back, rally all the way back up, find sellers, and then pulls back. This is a resistance level, okay? So that is essentially, in a nutshell, what support and resistance is. Now, let's get into the fun part where what is supply versus what is demand. Supply and demand zones, right? And essentially supply and demand zones. So up above, we'll look for supply levels. Down below, we'll look for demand levels, right? And essentially demand levels are where price has actually gone sideways for a little while, right? Think of it as a market profile, and this is where your POC is, right? Your point of control, because price has actually gone higher, and then you see a massive run to the upside, a pullback, okay, and then the buyers step in and price rallies. That's actually a demand zone right there. And so I'm going to draw, and let's kind of scroll in. Because there's a certain way to draw these demand zones. I'm going to show you guys what I've found to be one of the best ways, right? What we want to see is we want to see a downtrend. Okay, and then we want to see a consolidation. So right here, we kind of have a big consolidation level, but where do we start to draw it? Well, essentially, I want to see a huge power move like this. So see these big green bars, right? It's almost like, think of it as a rocket, right? We're waiting for the countdown, right? Countdown, and then all of a sudden it takes off. Okay, I don't want to see a little ratchet up and then go like this. We want to see big green bars kind of just up, just going straight up, right? Boom, boom, boom. That's kind of where a very strong move to the upside. When we find these, what I like to do is right where the kind of, and we'll call it the scene of the crime, right? Or the launch pad, where it takes off. I'm going to use this red candle, the high of this candle right here, of the body. And this is where I'm going to start to draw my demand zone. Okay, I'm going to just kind of take this demand zone and send it all the way out to the right. If you want to help support my channel, get some trading education, and also get weekly S&P E-mini trade zone levels, support and resistance, then you need to sign up with my $99 lifetime subscription, one-time payment of the S&P weekly trade zones, where you will get support and resistance levels, any open gaps and VPOCs, and you will also get a 7-hour video course of my top 5 trading strategies that I go over, that I use on a daily basis. Also, as a bonus, you will get over 30 free Thinkorswim custom indicators and charts, And you will get on a weekly basis every weekend, Thinkorswim share chart, so you can upload the drawings directly to your charts. If you use another brokerage firm, here are all the levels that you'll be able to draw your own levels on. So make sure you check out daytradingfearless.com to sign up, or the link down below. Again, $99, but back to the video. And as we could see, as price rallies, okay, and a lot of times we don't want to take this, right? We want to wait for a confirmation because we don't want to wait for, or we don't want to be chasing it. We want price to kind of come back and retest that level. And it's the very first touch of that retest where we want to look to be a buyer. And we could see, look at this, right? Right where we drew this, where did price pull back to? Right into this demand zone, and this is where buyers stepped in and moved the market higher. Now, there's a little caveat to when we want to, or what validates, and this is really important. One of the things that validates this to be a really good demand zone is we want price to actually make a new higher high. Right? What's happening is, if we kind of look back, price over here is making lower highs, right? Every time it bounces, keeps making lower highs, comes up, lower lows and lower highs, right? But then when price consolidates right here, price then rallies, we make a new high over this previous high. Okay, and then we get that pullback, and what's happened is essentially the entire market structure has shifted because we've been in a downtrend of lower highs to lower lows. Now we actually have our first higher high, and so on this pullback, usually what the pullback is after it makes this higher high is this is now should be a higher low, and this is where our entry is, right around this level, okay, or anywhere in the zone. It's up to you. If you've watched my videos, you know I always kind of look for the kickback on the divergence. Think of this as the same thing, right? This is the kickback of that divergence, but we're just using a demand zone, right? And this is where our entry would be, and our stop would go right below this low. Now, I would probably give it maybe a point or so below the low, because sometimes you'll see a new low whenever there's kind of a demand zone, right? On a bigger time frame, give it a point or two below, just in case they try and do a liquidity sweep. But this is a very clean trade, right? We had a downtrend go to an uptrend, pull back, buyers step in, and then the market rallies. Now, with this zone, let's kind of zoom out. Look at the move this had, right? Your risk reward's very small relative for what your reward is, but look at what happens when price comes all the way back down a couple days later, right? We come down near the zone. What happens? The buyers step in, right? We see price fall, and then buyers come in and they bounce price higher. Then we see another failure into the zone the very first time and another bounce. So there were multiple times to get long this zone, right? Or this demand zone. Now, as far as the supply zone, it's essentially the same exact way, right? Is you're just looking for the same type of pattern that we saw at the lows with a huge power move, right? We see it right here. Okay, we would essentially draw from, we could probably go from the low, or the low of the spotty, right, all the way up to the high, and then just move this all the way out further like this, and now we have a demand zone or a supply zone up above. We would just want to wait for price to now rally up into this level, and this is where we're going to look for a potential reversal. Okay, now a couple things that you can add to these levels are divergences when we're in the zone, right? Or if price kind of made a lower high right here, maybe pull up a RSI or fast stochastic. Did we make a higher low, right? And create actually a divergence. And when we see that divergence, especially with the kickback, that is another great confirmation. So if price comes up here, okay, let's say price rallies all the way up here and we get to the zone. Now you could take the trade on the very first touch of that zone, okay? Or if you want, what you could do is you could actually wait for price to go up, maybe pull back, come back in and look for a divergence or look for a pattern, maybe on a smaller time frame like a head and shoulders, to see for that reversal. Remember, sometimes maybe look at the 15-minute for the bigger zones, but then change to a 1 or a 2-minute. I personally like 1 minute levels, and maybe look for a head and shoulders or an inverse head and shoulders, things like that. So hopefully this video helps kind of clarify what the difference between a support and resistance level is versus a supply and demand. And when you start to understand these really well, you can now start to draw these, and as price moves into these levels, they become very high probability trades if you know what to look for reversals. So hopefully that helps. As always, thank you for watching my videos. And don't forget, if you want to learn how to draw my trade zones for the S&P futures or any other future stock, Forex, make sure you check out my video course, $99, one-time payment, and all that. Links down below, or go to my website, daytrainfearless.com. But as always, thanks for watching, and we'll talk to you soon.